obviously 7,500 is more than 6,500. So now you have to raise your monthly contribution or your paycheck contribution, how much you're doing. And what better time to do that than at the beginning of the year, because you don't want to get to the end of the year and then somebody tells you, hey, you could have put in 7,500 instead of 65. And what if you don't have the $1,000 extra? So we want to get into this now so you can actually plan ahead and break it down. And if you're not doing this, the answer is yes. You can break out your contributions monthly or weekly. It really doesn't matter as long as you stay under that limit. Now, if you accidentally contributed over the limit, you will have to take some out, but that's a totally different video. So that's why, again, it's nice to be responsible and watch something like this real quick and be like, hey, I can put in $7,500 if I'm over 50, $6,500 if I'm under 50, and break it out monthly or break it out weekly, however I want from the beginning of the year. So it's much littler chunks, much less noticeable in the bank account, and so much easier to save because it's an automatic. You can set up an automatic deduction for something like this. So again, it doesn't have to be so hard. We don't have to make retirement planning so hard, like, oh my gosh, when am I going to make my retirement plan contribution? You can set it up now. You can go to the bank and set it up. You can go to your advisor and set it up. It can be automatic right now. Okay, so that limit changed. So again, under 50, 6,500, over 50, 7,500 in your IRAs, either Roth or traditional. Now what changed as well is the income limits. So if you make over certain amounts, where's the Roth? If you make over certain amounts, there it is, you cannot contribute to a Roth. So last year it was $144,000 for a single person and $214,000 for married couples. This year it got bumped up. So now it's up to $153,000 for an individual, $228,000 if you're married. So again, if you make over those levels, you're not allowed to contribute to a Roth IRA. This does not apply for Roth 401ks. I'm going to say that again. So if you work somewhere and they offer you a 401k, chances are, most places, not all, but most places have a Roth option in your 401k. You can still do that. It's just the external Roth IRA, you open it up with E-Trade, Fidelity, it doesn't matter. With us, it doesn't matter where you opened it. You have an income limit. If you're over that income limit, you cannot put money into a Roth IRA. So that is why a Roth 401k is so advantageous, and I would certainly take advantage of that if you're over that income limit, because a lot of wages went up this year. So we certainly want to look at your income limits because you don't want to get penalized for putting money in a Roth when you actually ended up being over the income limit, and you don't want to have to pull money out. So that's why it's important, again, to start now, to listen to these things now and find out about these things now. So even if you don't save this video and you didn't take notes, just be aware that at some point in time during the year, you better check what you're pacing for the year, or if you got a promotion, or if you got a raise, because you don't want, again, to contribute things that you are not supposed to. Okay, now, remember when I said a traditional IRA, you get the tax deduction now. Well, there's a little rule that the IRS has that says if you have access to an employer plan, like a 401k, or a simple, or a SEP, or a 403b, or a 457, there's a lot of different types of plans. If you don't have to know exactly what type of plan it is. The point is if you work somewhere and they offer a retirement plan, whether or not you're actually contributing, they just have to offer it. If you have access to one, then the IRS says, well, we're going to limit how much you can actually deduct your traditional IRA contribution. And there's income limits. There's a giant chart like this, so I'm going to just kind of graze over it because there's different levels, and you know what, maybe I'll even post the chart like in the comments or on our page. I'll post it so that you can have it. But they're going up. That's the whole point. For 2023, the income limits are changing. So if you couldn't deduct your traditional IRA contribution for last year, it's possible you'll be able to deduct it this year. Again, this is only if you have access to an employer plan at your employer. I just want to see if there's any comments right here. Okay, not so far. Oh, I have one. Hi, Ed. Okay, so we're following me so far? Hopefully. Okay, so the income limits if you have access to a retirement plan at work and you make over $73,000 if you're single. Last year, it was $68,000. But the range, so some of it, this is where you might have to get your accountant involved or call us because there's a range. So some of it will be deductible if you made between $73,000 and $83,000 if you're single and you have access to an employer plan at work. If you're married, some may be deductible. If you're between $116,000 and $136,000, that's a big range. And you may say, well, how do I know how much? Well, if you're halfway through the range, half of it will be deductible. It's kind of like it's a percentage. How much you're into the range will be how much is deductible. So if you make over $136,000 as a married couple in 2023, and you have access to an employer plan at work, one of my lights just died. Sorry. And you have access to an employer plan at work, you may not, well, probably will not, be able to deduct your 2023 IRA contribution. So in that case, you'd either need to put more in your 401k, right, because you have access to an employer plan, or you could look at a Roth, because the Roth limit for a married couple is $228,000. So this is where you might need a planner. I mean, you don't need a planner, but it does get a little confusing. But again, like if you're taking notes and you map it out and you're looking at the levels, and this is just on Forbes, but it's on the IRS website too. But if you need to determine which one you're going to do and how much you're going to deduct, you have to look at your income levels. Okay, so far we've covered, for those of you just joining, so far we've covered the difference between traditional and Roth IRA because the limits changed on both of those. The contribution limits got bumped up to $6,500 if you're under 50, $7,500 if you're over 50, and then the income levels changed. And if you didn't get the income levels, rewind a little bit because I just went over them all. So the income levels got bumped up, so now you may be able to contribute to a Roth, and you may be able to deduct your IRA contribution off of your taxes. Okay, now, let's see. Traditional IRA. Separate income thresholds. Oh, okay. If one is not covered by, I don't want to go over that. That's too complicated. Okay, so let's go back to retirement plans. So now retirement planning limits also changed. So again, if you have a 401k, your limit now just changed. This one is quite a bit of money. So in 2022, you were able to do $20,500. That now gets bumped up to $22,500. So again, this is important at the beginning of the year because you want to update your paychecks. You got to go to your employer, your HR, and say, hey, I know the limit increased, and this is if you are maxing out. I mean, a lot of people don't max out, but a lot of people do. So if you are maxing out at the $20,500, now you have to change your per paycheck contribution because you can now put in $2,000 more in a year if you're under 50. If you're over 50, you can now catch up by another $7,500. So that means if you're over 50, you can put $30,000 into your 401k this year in 2023. In 2022, the catch-up was only $6,500. So your total was like $27,000 in 2022. So if you're over 50, your increase just went up by $3,000. So again, you have to change your paychecks because otherwise you're going to undercut yourself. You're not going to max out your deductibility. Or this is also the limit for Roth 401k. So if you're putting in Roth contributions, again, that means after tax. You don't get the deduction now, you'll get it later. It'll be tax-free growth and you'll get the deduction later, which is pretty awesome. If we think taxes are going up or if you think you're going to be in a higher tax bracket in retirement. For whatever reason, maybe you would have a pension, maybe you're selling your business, maybe you know you're going to get an inheritance and you'll have some income from that. There's a few reasons why you might have more income in retirement. Or maybe you've saved a ton of money and it's all taxable and you're going to have a lot coming back to you in retirement. In which case, maybe you had a pretty good planner and now you need a tax planner. Now you need someone to help you with tax planning, which we also do. Okay, so again, this is how much you can deduct from your paycheck with an employer. got bumped up by $3,000 if you're over 50, by $2,000 if you're under 50. If you're self-employed, you can have a 401k. Now, this applies to big employers too, but very rarely does an employee at a larger employer max out, they call this, well, I don't need to get into the weeds too much. There's a limit that you can contribute into a 401k between your money and your employer's money. They can do one of two things. They can do a match. They can do both things. They have a choice to do one of two or both. I should say it like that. They can do a match, which is what most places do. They can also do profit sharing above and beyond the match. They could do both. They could do just profit sharing if they wanted. So there's a limit for all three of those contributions. If you have all three of those contributions, my money and the employer's money, either match, profit sharing, or both, was capped out at $61,000 in 2022. They bumped it up to $66,000. Again, I started by saying this as if you're self-employed. So a solo person can hit that limit very easy because there's no testing and all this tax return stuff that goes into a 401k and how much they can put in per employee and all this stuff. When you're alone, you can get up to that limit pretty easy. So it got bumped up by $5,000, went from $61,000 to $66,000 if you're under 50, and then the catch-up, again, that's a term that they use if you're over 50. You got to put in $6,500 in 2022 additional. Now you can do $7,500 additional. So your total, if you're over 50, went from last year's $67,500 to $73,500. So $6,000 more if you're over 50 can go into your 401k. So again, at the beginning of the year, we need to be adjusting, we call it your systematics, your systematic deductible contributions. So you're deducting per paycheck, you're deducting per month, whatever it is, needs to be adjusted because now all these limits went up. That's a fabulous thing because now we are going to save more on taxes. So I hope these limits help you. The taxes, the taxable income it's not difficult. It's not terribly difficult to understand, but you do need a little bit of thought to go into it. You can't just throw money in a retirement plan and hope it works. You have to have a little bit of a strategic plan, and it has to be according to these limits. And really, at the beginning of the year is the best way to do it. Like I said, those automatic contributions is an amazing way to do it because then you know by the end of the year it's already done and you don't have to come up with the money. And then a lot of people forget about it. I mean, finances should be one of those things that's right up there with our health that we take care of. But I know it isn't. It's just one of those things that gets pushed to the side. I don't take care of it. I've been meaning to, but life happens. I get it. That is why automatic contributions from the beginning, according to the limit, if you're going to be, at the limit. You obviously can do below the limit if you want to. But any automatic contribution is huge to your savings success. To have it set up automatically is a big load off at the end of the year. You had this task on your mind all year long. Oh, I've been meaning to figure out how much I can put into my retirement plan. Start somewhere. Just do an automatic deduction, start somewhere, and at the end of the year, it's done. Piece of cake. So if you have any questions on these updates, I'm happy to answer them for you. Again, share out this video if it helped you, if I hopefully didn't talk over your head, and I hopefully didn't talk too basic. Hopefully it was somewhere in the middle and it can help someone. That is the whole point of these videos, is to get information out. These are not recommendations. Again, I don't know your personal situation, so I'm not sitting here saying you should do Roth, you should do traditional. It depends on your individual situation. So again, if you're sharing it out, it's just general information that anybody can listen to, and then they still need to make that decision based on their own financial situation for themselves. All right, guys, have an amazing weekend, have an amazing Friday, and I look forward to hopefully doing these more consistent. That's one of my New Year's goals in 2023. So I look forward to seeing you more. If you have any suggestions on what you want to hear or what you want me to explain, again, please reach out to us, info@novawealthmanagement.com, or just go to our website, novawealthmanagement.com, or you can also post it on Facebook in the comments. That would be perfectly fine with me, and I will take your suggestions. All right, have an amazing weekend. I'll see you next time. Bye.